I'm John Wilson. Welcome to Owned and Operated. Twice a week, we talk about home service businesses. And if you're a home service entrepreneur, then this is going to be the show for you. We talk about our own business in residential plumbing, HVAC, and electric. And we also talk about business models that we just find interesting. Let's get into it. If you like what we talk about on our social media, on Twitter, on this podcast, then you should be signed up for our newsletter. Go to ownedandoperated.com, where every Friday we break down our business, we break down insights, things we're learning, things we're working on, and it's good stuff. Check it out, ownedandoperated.com. Welcome back to Owned and Operated. Today we have Damon Chlarson on. So Damon, we met a couple years ago. He's a great guy, and he bought an insulation business. And in this episode, we talk about his journey over the past few years, which has been a difficult journey as he has ended up shutting the business down. So we dive into what that looked like, how the process worked over the past few years, what were the pitfalls that he found in entrepreneurship, and the lessons to take away for the listener. It was a great episode, and we really appreciate Damon coming on, especially as there's a lot of dialogue out there right now about how tough it is for businesses in this current environment. I know I say this in the show, but the past 18 months has very easily been the hardest 18 months of my professional life. It has been a real challenge, and interest rates, ever increasing material costs, labor costs. It's been, sort of a nonstop roller coaster. And Damon, walking into that, got bumped around a little bit. So it's a great episode. We're very thankful he came on and he had a great message for us. So thanks for tuning in. Welcome back to Owned and Operated. Today we've got Damon on with us. Welcome, Damon, to Owned and Operated.
Glad to be here. A long-time listener, so excited to be on.
Yeah, cool. We brought you on today to talk about your business and some current challenges that you're facing. So do you think you could get us started with just a minute warm-up on sort of your background and the business and talking about where it's at today, and then we'll just deep dive from there?
Yeah, for sure. My background before I bought this business, which I closed on it in 2 years ago in November of 2021, my background was just in sales, primarily in technology, software, that sort of thing. And I'd been searching for businesses for a couple of years, just looking at different deals and things that kind of came my way. And then this kind of fell into my lap. And so what it was essentially was a drop shipping business that sold insulation. So you have these big national suppliers that supply insulation to contractors. And usually it's a pretty good deal if you're a contractor, and then you mark it up to your client. And so instead of selling to contractors, they would sell to us, and then we would usually sell to smaller businesses or homeowners, that sort of thing. So it was drop shipping in a way, but you used local delivery to do it. And so the year before I bought it, it had 2 or 3 record years in a row. And then I took over in November of 2021.
Gotcha. When I'm thinking about insulation, is this like blown insulation or rolled up insulation, or both?
Technically both. The bulk of our business came from batted insulation, like rolls or bats.
Okay.
They come in big sections that come in bags. And then, we pretty much just sold bags for the most part. Selling other insulation, like spray in, that sort of thing, foam, you have to have a certain license to purchase it. And so we didn't sell very much of that.
And it was all to B, right? So it was all to GCs who are doing this, or were you selling to other insulation contractors, or who was the main focus of your buyer?
Yeah. So primarily it was I kind of identified it as our ideal customer was a guy who was a general contractor and maybe had 2 or 3 crews. Any bigger, and then he could go directly to our suppliers and get bulk pricing. And then obviously we would have homeowners, but they were a smaller part of the business. Usually it's small businesses, very small trucks.
And then compared to the big guys, you can go down to Home Depot and grab insulation or a hardware store. Were you guys cheaper than them? Or what was the value proposition? Was it that you guys were just direct to them? You could be better service than Home Depot? What did that look like?
Yeah. So really that's where some of the challenges come into play. We did compete against Home Depot and Lowe's, and usually we were about 25% cheaper, at least when I took over. And then slowly but surely that margin started to get smaller and smaller and smaller and smaller. And pretty soon it was pretty much non-existent.
Because your cost of supplies was going up?
Yeah. So insulation's had quite a few price increases. And really what we saw was we would get hit, our suppliers would get hit first. And usually Home Depot, Lowe's, Menards, these big, national guys, they have price guarantees in place for a certain amount of time. So it'd be like a 90-day lag. So we would get hit with a price increase. It would hit us September 1st, and then they wouldn't hit it until December. We dealt with some of that along the way as well.
Can we take a step back here, John? You said that this insulation business fell into your lap. You were searching for 2 years and different things. Talk about that search time. How did you focus and what industries were you focusing on? And then how did you fall upon the installation? How did that kind of come to fruition? For anyone who's not watching on YouTube, there's a rave going on in the back.
Yeah, my 7-year-old son is flickering the lights. Yeah, honestly, this is one thing I would have done a lot differently now. I searched primarily geographically based. I wanted to buy something here in Utah. I live just outside of Salt Lake City. And so I was looking for something that was pretty much Utah based, and I didn't really care what it was. I searched that way. I didn't really want to do something HVAC or plumbing, anything too service or like trade oriented, because I just don't know it. Like, I'm just not smart enough. Like, I would have, if someone calls out, I can't hop on a job and go do it. And so, I was pretty hesitant to do something like that. So then this kind of fell into my lap. It had a combination of sales with a little bit of customer service mixed in. I feel like something I could tackle.
Yeah.
And then, so did you find it through like biz buy sell? Did someone bring it to you?
Oh yeah. So I made a pretty good relationship with a broker, and he actually let me check it out like maybe 2 days before it went live on like their site, and like he blasted it out to all of his contacts. And so I had like a head start, which was really helpful in terms of getting it under LOI. But yeah,
Stop us if we ever overstep. But in terms of like, what does the multiple look like on a business like that? On drop shipping businesses, I have no idea.
yeah, it's definitely different than what you would see in the service business. I ended up buying mine for about 2x. He had about 600,000 in net, in EBITDA the year before, or 2021. I bought it for 1.1 million. Pretty good deal in that regard, and looked like it should be. Even if we went back to 2020 revenue, which was less than 2021, we would have been clearing debt service and coming away with a pretty healthy margin at that point. It was around 350 to 400 in those days.
Yeah. So the customer that you're serving, it was like mainly homes or commercial properties, or what did that usually look like?
Mostly homes. Yeah. Primarily
Okay.
residential installation. And then from there, we had some commercial stuff, but that was it.
Yeah. And you bought at the tail end of 21.
Yeah. Right at the very end.
So we had a business that we bought at that time, and it was a real journey because they were a B2B. So we would like work with GCs, same as you, right? And we ended up shutting all of it down, like millions of dollars of revenue, because all the customers went bankrupt, which like was one vertical. So we were doing a bunch of car washes. It was in our electrical business. So we were like wiring up car washes. And then all these GCs that were like doing the construction, they all just stopped working one day. It was like mid-August of 2022, just randomly stopped. But all that to say, that is a tough time to grab it, because right at the beginning of 22 was like month over month material increases. And that was our issue too. For people not familiar with selling to businesses or like how construction works, is you have these super long sales cycles. The GCs have these like 6 to 12 month sales cycles, maybe even longer, where they're like selling a home or selling a project or whatever it is. And they typically aren't adding escalators for material price increases. No one expected copper wire to quadruple in price in 4 months at the beginning of 2022. That had never happened, right? So a lot of businesses, myself included, were really caught unprepared by like month over month, like 10, 15, 20% price increases that just kept coming and not slowing down at all, paired with gas price increases that doubled. And this wasn't even interest rates yet. It was just like material scarcity. So yeah, that was a crazy time, especially with long sales cycles with contracts that don't allow you to change price. So we learned our lesson and we like changed the contracts, and we were like, hey, yeah, now we can change price. But the problem is we still had 6 months of a backlog of work to complete. So even though we made this great change today, it wouldn't go live until August or September.
Yeah, it was a really weird time. And like, even still, like the business, I'll check the phone and we'll get texts from people, hey, have insulation prices come down? I want to buy something. But I don't think they're coming down anytime soon.
Yeah.
I don't foresee that happening. So yeah, the price increases were huge. But really, I bought it, and I guess going back, it really was interesting. The first 2-3 months were phenomenal. We had record Decembers, record November. Even the January was pretty good. And so I was thinking like, oh, this is easy. This is so easy. Why doesn't everyone just buy a business? It's so simple. This is the easiest way ever to get rich. What are you thinking?
Yeah.
And then I noticed we had some challenges, just like normal challenges, but everything was pretty much running smooth until around May of last year. And that's when I got, I would say, scared. That was when May of 22 was when I was like, okay, maybe something could go wrong. I just noticed we got hit with a pretty big price increase, and we were really competing on margin. We went from selling our product at 28% margins to 22%, which doesn't seem like a huge difference, but
that's a difference. If you only have 28%, that's 30% of your margin just disappeared.
Right. And then
Yeah.
you're doing $2.5 million, $3 million in sales. That 6% goes a long ways. And then right around the same time, interest rates start rising and people start slowing down builds in general, canceling jobs, postponing jobs. And so I would say our monthly revenue went from around 250,000 in sales until May was probably 95,000 in sales, May of last year.
Yeah.
And then we had some rebound in the summer, maybe up to like 120, 130, but nothing really that great. And we just survived, basically shuffled cash, owed one supplier, borrowed from Peter to pay Paul, basically owed one supplier this. Okay, we paid that supplier, now pay this supplier. Oh, it's SBA loan day. I got to pay the SBA loan. And just kind of shuffled that around. And so we were making things work. It wasn't pretty, but it was working. And so I just thought, if we could float a little longer to get back to like where interest rates maybe level out a little bit and people get a little more calm about building, we'll probably be okay. And we just kept floating and we just kept floating. And back in November of last year, I went back to work. I was like, okay, this isn't going to support me and pay the debt service. So I'm going to go back to work. So I went back to tech, doing sales for a software company. Luckily, I still had that in the bag. That helped. Being able to kind of run both. And so I have one screen, keeping my eye on the business, making sure everything's getting replies, see what invoices are being paid, my email's open. And then I have work on like a different screen for the company. And they knew that I owned the business, so it was fine. But yeah, that was definitely a challenge.
Yeah. And since then, I don't know if we've said it yet on this episode while recording, but since then you've shut that business down. So that's the current state of the insulation business, is it's no longer functioning. So what was the journey from last May to, you shut it down. So was it a continued sort of down spiral or you just dropped off?
It kept going down, but then we would have these upticks. We'd have these random upticks where we had a really good November and December of last year. So now we're good for another few months. And so it's like, all right, now we've got something going. And so we kept doing that back and forth.
And that sort of feels like it's prolonging, because you'd probably resigned yourself to like, all right, maybe this isn't working. And then you got, I don't know, there was an uptick. And because before we started, you were like, hey, maybe we didn't shut it down soon enough. So is that a part of what it was? You had these like couple months and you're like, all right, maybe. And then.
Yeah. And I would go back and forth. Basically, we'd have these good few months and then we're okay. We're surviving. We're making it work.
Yeah.
And then I would say we get to a level place about February of last year. And then that's when things really went off the rails in a completely different way. So we had gotten to the point where we're doing okay sales wise. We're surviving. I have a job. So my family, we're getting a little bit of money from the business, but not much. And then in March of this year, we got hit with just a ton of fraud. So basically, fraud. So basically people are stealing credit cards, buying insulation, having it shipped to a random location. It gets dropped off there to them. They put it in a truck and then they run off. And then I get hit with the chargebacks. I got hit with about $50,000 in chargebacks in the month of March last year. And the thing is, you don't know they're bad until 30 to 45 days after you deliver the order.
Yeah.
That is not a turn I expected on the podcast. That's what sunk was fraud.
It wasn't just 50. It kept going for like 3 months, 3-4 months.
Yeah. And especially in the time when you're like relying on that 50 to get you through and you're paying everybody off immediately. And then all of a sudden, that money goes backwards, disappears.
So now I've lost the money, plus I owe my suppliers. What I did was I structured it with my supplier. Hey, can I get longer terms on these deals? While I figured this out, I just explained to him, we got fraud issue here. He's like, yeah, no problem. I was pretty close with the credit manager that I work with. So he was like, yeah, we'll help you out on it. We kind of pushed it out. And come June, it's like, all right, now they've given me an extra 60 days to figure this out. And so then they were going to let me finance it over 3 years. They were like, hey, you got hit with this. So we'll finance this over 3 years. I was like, okay, I can probably find a way to swing that. And so then that was just a matter of getting sales back to a regular place where it's running consistently again, and then pay that off slowly. And that's the thing that you don't realize. When you start a business from scratch, you can shut it down and there's really no harm, no foul most of the time. Yeah, maybe I lost some money, but like when you buy a business and you leverage your home against it and everything you have, you can't just fail. Like you really can't. You've got to like scrape and scratch and fight and do everything possible to get to survive. And I don't know, I didn't really fully understand what that would look like until I was in it,
Yeah. So the note is being covered by your job. Is that right?
So no. So the plan now is like the business is going completely bankrupt.
Okay. Gotcha.
That's where we're at. Yeah. That's really the only solution at this point. Between money we owe suppliers, money we owe the SBA and credit cards trying to make things work. There's really no other option at this point.
Hey, this episode is sponsored by Service Scalers. So Service Scalers is actually a brand that I've used personally with our companies for a little bit over a year now. They've helped us manage our digital advertising. Frankly, they did a lot better than our last agency. Leads went through the roof and cost per click went way down. Check out Service Scalers if you're a plumbing, HVAC, or electrical home service company. That's what they knock out of the park, and they did a great job for me. How did conversations with the lenders go?
The biggest thing is nobody really wants to work with you when times are tough. Is kind of what it seemed like. It was really difficult to spin this story in a way of like, they're not going to just, how do I say this? There was no way to sell this business to them and like, hey, you should invest in this or you should help me keep this going.
Okay.
If that makes sense. And so that's where I was at. I was trying to figure out a way to make that work. And I knew if I couldn't get this, if we couldn't finance all the fraud, it ended up being about $120,000 total once it was all said and done. Just insane. And
that's crazy. Oh, over the course of 90 days.
It was, from March until the last time I got hit with fraud was in July.
Yeah, that's
Did they
insane.
come up with the resolution on how to prevent that in the future, or they're just like, figure it out?
So I ended up getting an insurance company, like a fraud insurance provider, but it ended up being not very helpful because we aren't a traditional business where people are checking out online, which was their skill set. It was like, oh, we're going to identify risk factors based on the way that they go through like their checkout and like information on that card. But the cards that we were running were good cards still. And so there was really no way for them to catch it. That ended up not being super helpful. But really what I did was I implemented number one, we were just having lots of fraud in like a couple of different areas. So I was just like, okay, we're not going to sell. It was in El Paso, Texas. We're not going to sell in El Paso anymore. And in Chicago, we're not selling in Chicago anymore. So we just stopped running ads there, didn't sell there at all. And then also we would make people send in pictures of their ID if it was an order over $5,000. And then that seemed to eliminate it quite a bit. So we actually haven't had fraud for 4 or 5 months now. But we said so much. And so basically my supplier let me know, essentially they weren't going to be able to keep that agreement going long-term. A couple of my suppliers merged and the new supplier that took over was like, we're not going to honor that. You guys need to pay it. And I was like, I can't. And when I was looking at different lenders, this was like last week, I was talking to different lenders on the phone, trying to get some money to pay these off. And I realized this is not working. This isn't going to work. We are trying to keep something alive that has been dead for a year and a half. Once I made that realization, it was really peaceful. I was like, all right, I'm good to go. We can move on. It's dead. We took a big swing. Sometimes you miss.
Yeah, I think I would have never guessed, and obviously you didn't either, but that exposure to fraud, that wouldn't have even crossed my mind. That would be...
It was never a problem before either. Yeah. So in due diligence, he had never had any real fraudulent. He'd have maybe some bad debts, but not very many.
Yeah.
Think without that fraud issue that you'd be in the same position you're in today, or would you think that just sped up the inevitable?
I think it sped up the inevitable to a certain degree because I think the model wasn't working anymore because we had lost our margin because we kept losing our margin. And so pretty soon, it got to the point where we were marking things up 11 or 12%, which is barely anything when you have your entire operating income comes from that margin. Honestly, I do feel like it just sped up the inevitable. But this probably wouldn't have happened for another couple of years if we had an extra 120,000 to operate with.
Yeah, this is early stages 2008 to me, is what all this feels like. And any business that touches, including mine, including portions of our business that we have shut down. It's just that we happen to have other parts of the business. But we've shut down in the past 12 months, we've shut down $4 million of revenue that was exposed to construction in some capacity. And in shutting those down, we took some punches. One of them was $1.5 million a year business line. And it cost us $300,000 to shut it down. That my last payment was December. It was crazy.
Wow.
It's suppliers. Same issue that you went through with suppliers. The only difference is that's a portion of my business, but it still had a big impact. And then the remodel portion of the business, same thing. Payments started getting slow, interest rates going up. We shut it down. We were able to reallocate them into other parts of the business. But that team went from 20 some people to there's 3 on that team now. And by the end of December, there will be none. And it's all just exposure to construction. I don't know. My point is, it doesn't really matter which section of the industry you're in. This is that reality of this construction side of the business. It eventually gets you. Eventually it gets everybody. And there's no it ain't personal. I don't know. Comes after you, came after me. We lost a ton of money shutting ours down this year. And it was a $4 million a year top line. 2 business units that made that up that are now fully gone.
Yeah, that's insane. And when I was shopping around for SBA loans originally, I remember Live Oak has such a large presence. I was like, I'll just talk with Live Oak. And they were like, we don't touch construction. And I was like, you don't touch construction? No, not at all. We don't do anything with the construction.
But I think the problem is it pencils So construction is good for 8 out of 10 years.
Yeah.
Every 8 out of 10 years. And I think that's the argument is like, hey, yeah, it worked. It penciled the last 3, 4 years, 5 years, whatever years you're looking at. But like out of 8 of 10 years, it's always going to pencil. It's just those two that really get you.
Yeah. And that's unfortunately where I landed in that
Yeah.
last
Yeah.
6 months of it or so. And there's some things that I definitely should have caught that I would know to catch now that I didn't at the time. There's a really big customer concentration issue, which I caught, but I justified. So, okay, this business made up a ton of revenue in 2021, but they were non-existent for years prior. So I'm going to let that slide. But it did come as a shock. I was like, okay, these people were like 30% of your revenue. This is a lot of money. The other thing is the guy that I bought it from wasn't properly paying sales tax in every state. So what he was doing was he was collecting sales tax, but then counting that as like revenue. Basically, EBITDA for 2021 would have been overstated by like about $120,000. And there's no way for me to really find that out, I don't think, until I got like my fingers in the business. I really started figuring things out when I started pushing orders out myself. And I realized like, oh, why are we marking this up, but not giving it a tax code in QuickBooks? Oh, because we only do that in these 2 states. I said, oh, that doesn't seem above board. And then I just have to realize like, oh, he's the
Good old tax.
It's not.
It's a little bit of tax fraud. I've never heard anybody.
Yeah.
So if you were to do this all over, I know going back in time and the what ifs is not really healthy, but from a standpoint for people listening to this that are going out and acquiring, what do you think you'd do differently right out the gate?
I think the number one thing I would do is I would go bigger, because if you're going to strike out, you're going to lose it all anyways. Might as well go as big as you can. So we bought a $1.1 million business. I would have tried to buy a $3 or $4 million business. I would have gone trying to go as big as I could. And I would have done it with a partner who offsets my weaknesses. I'm not a finance guy. I'm not a numbers guy. That's not my thing. I'm good with people. I'm good with sales. And I would have focused on doing that aspect of it. And I would have let them do all the integrations, make sure that where cash is being managed the way it should be effectively. So I would have gone bigger. I would have gone with a partner. And then probably the last thing I would have done is I would have listened maybe a little more closely to the banks that told me no and why. I was so dead set on getting a yes that the banks who told me no, I was just like, these guys are idiots. They can't see good business when it falls into their laps. And then, of course, that ends up being what kind of takes us to the fact we're in this construction industry. I'd say those kind of 3 things are where I would look. And then also just assume that it's going to go wrong. And if you're an entrepreneur, you're probably optimistic by nature, and that's great. But like, you need to have somebody in your corner, like telling you it's going to go wrong, telling you it might go wrong. And if you're not that person, then you need to find that person.
Yeah, there's a book. Honestly, I think it's like right behind me.
We're going to all wait here till you find it.
Oh, I see it. I see it.
Don't cut
It's
that.
called It's Only the Paranoid Survive. And it's a fascinating book. I'm trying to remember who it was. It was like Xerox, or it was like a fairly large tech company, and like Fortune 500 now, but written from the time that it wasn't Fortune 500. And it was data chips. Intel. It was Intel. A fascinating book about not understanding that there will be a punch you in your face risk. There will always be one or many, and how you have to keep reinventing yourself. Good book, but sort of pushes that point deeper of, I think you have to be always optimistic. Assume success. That was the phrase I saw somebody use the other day. Assume success, but be ready to be kneecapped. That'll probably help.
What's the next steps for you? Is there any way that the Twitter community or our community can help you out? What do you have going on here moving forward?
Yeah, honestly, I'm excited to just be an employee full time. I'm excited to clock in and clock out.
Yeah.
And just leave work at work. But no, honestly, it's been great. I'm not sure if you guys have come across Hunter. He's also going through bankruptcy at this point.
Yeah.
So we talked for about an hour and a half on the phone last week. He just volunteered his time just to walk me through the process. And honestly, just, it feels like a big weight off my shoulders. Like I said, making the decision wasn't the hard thing. The hard part was the way down. So at this point, I feel really good. But yeah, no, nothing really. I'm excited to just see more people. I don't view it necessarily as a failure either. I always wanted to acquire a business, even since my early days of college. And
Yeah.
I went out and did it. Didn't go the way I wanted it to. Maybe the next one will. You never know.
Yeah. And I think, I don't know that I see it as a failure either. Anyone with exposure to construction right now is feeling what you felt. That's
Yeah.
the reality. And that was the purpose of me sharing my same exposure, was like, we took a real punch to the face. We just happened to be a larger business. So maybe pointing back to
Right.
your like acquire larger idea. But I agree. Anyone exposed to construction right now is feeling it.
Yeah.
I had over the summer 5 or 6 friends that were either actively going bankrupt or preparing to go bankrupt, all with significant construction exposure. And the only reason that we didn't is because our construction exposure was limited to 20% of our total revenue. But like all that to say, I don't see it as a failure either. You happen to be on the wrong end of a cycle. But like anyone in touching construction is getting kneecapped right now.
Way to end on a great
Yeah.
note there.
The reality.
The
Yeah.
awkward sounds after saying that if you're in construction, you're going to get kneecapped. Be prepared. I think this is also a good point to bring out. Like we do have a lot of construction exposure. I see it. We're buying, right? Plumbing and
Yeah.
companies are trying all the time. Where you see this, and the owners can't wrap their head around, or the sellers can't wrap their head around why you won't accept their 40% of work that is construction. And it's the explanation that, hey, this is not a stable industry right now. You can't promise me that this construction work is going to come back next year. So
Yeah.
I'm going to give you 20%, 10% of it if you're lucky. And that being said, hold tight, buyers, hold tight on that. Don't fall into a buyer's trap on this. I think this is a really important point to drive home is behind every construction company, there is a service company. That all being said, when you're buying, careful of the construction side, definitely.
Honestly, yeah, it's been a really interesting experience just seeing the way that how hard it is to make a profit. Like it really is so
Yeah.
hard to make a profit. And I think the world population at large doesn't necessarily appreciate how difficult it is to actually run
Yeah.
a good business. Because now that I've run one, I'll see a good business and I'm just in awe by it. I'm like, these people are raking in cash and it's not
Yeah.
easy to do at all.
Yeah, it's not. I think more and more people are feeling that now. I don't know. I think there's a lot of pain. I know we're feeling it. Honestly, almost everyone I know is feeling it. It's been earning for us, but the construction thing was a real hit for the past 2 years. But, we did a secret shop today, which is you have a competitor out to a property that you own and you send somebody out there and you like get a feel for their service and pricing. And so we do it pretty regularly to gut check, but also like we want to check you out, see how you do, right? And today was really interesting. This is back to just like pain and how everyone's feeling this. I'm not trying to go off on a tangent, but today was really interesting because we had a former market leader, someone that I've looked up to most of my career as a brand, and they fumbled the ball at literally every single block. And then they get out there and we find out that their company is down 80% from 3 years ago. 80. Like 80. They're an HVAC and not like only service, residential service replacement repair, not construction. And I'm just like, holy freaking smokes.
Yeah.
Because they were the like market leaders, most expensive in the market, the one that never messed up. It was these guys. And they fumbled the ball at every turn. And then they're down 80%. I don't remember how I got onto that. But yeah, it gives you a lot of really interesting information. And then it's nice because then you can see where people are weak and try to be strong. It was funny. Like one of the balls they dropped was call center, which obviously we talk a lot about on this show. And like the booking process was a nightmare. So they booked online, which is meant to be seamless. And then they called in to reconfirm the appointment. And it was a 12-minute phone call that they were on hold for 10 minutes for an online instant booking. There was a follow-up 12-minute call with a 10-minute hold. That's the worst ever. And when they tell me that, I'm like, what's our hold time per CSR per day? Because I bet you we dropped the ball there too. I bet our hold time's like 4 or 5 minutes, like an hour per CSR. And ours ended up not being as bad as theirs, but it was still pretty rough. But yes, I do recommend you try it out. All that to say, pain in the market's happening all over. People are feeling it across every spectrum, including market leaders or former market leaders.
Yeah, definitely.
I appreciate you coming on the show today and sharing your journey. This was good. It's challenging to do this, and this is an especially challenging time. Easily the last 18 months, I know how we talk about it, like we are growing and all that stuff, but the last 18 months of my professional life has easily been the hardest 18 months of my entire career. It is a challenging business environment. So I appreciate you coming on and sharing your story about it.
Yeah, no, happy to do it. And I hope it doesn't discourage people from going after it, but hopefully it has a couple more questions come up for them.
Yeah, I think size is valuable. We talk about that a lot. I know Rich has talked about that. We've talked about that here. Like size is really important, especially at that $1 million to $2 million range. Like any drop in a person or in revenue is a meaningful drop in dollars, which is what you experienced. And like Jack, he bought it was sub $1 million, right? And like the first day, your key person quit.
Yeah.
And you had 3 people. So 1/3 of your company quit. It was the same experience for Rich. Yeah, size matters a lot. And I think that's a big one. And then, yeah, if bank's telling you no.
Listen to banks.
Why? Maybe dive deeper. Maybe dive deeper into why. Sometimes they're wrong.
I don't know. Have you run into a bank that's been wrong before? Yeah.
So anything touching construction is a dirty word in banking. And that's anything. including plumbing, HVAC, and electric. So we share the NAICS code for plumbing and heating contractors, which when they get above a certain exposure and your account size is above a certain size, whether it's credit facility, debt, operating balances, they start looking real hard. Late last year, as more companies in the industry were going bankrupt, we had some real conversations with banks. Not because of business performance, like everything was still moving as it needed to through our business, but because the industry in that NAICS code, they felt that they were overexposed to construction.
Yeah, that makes
So we had credit lines slashed by 80%. I have 80 vehicles on the road. And one day our fuel cards credit limit went from 100 grand to 10. 10 grand is a day of gas. What am I supposed to do with 10 grand? So it was crazy. And that just happened one day. And I'm like, what the hell just happened? And I get a letter. It's, hey, we're concerned about your NAICS code. We had our credit card facility not renew, and they gave us 2 weeks to switch 110 pieces of plastic because we were exposed to the construction industry. It's crazy. Anything that looks like construction, even if you're not actually construction, like we're not, that one portion of our business was, but 80% of our revenue wasn't. We have a story to tell. But because we look like construction, we got hit in a bunch of different ways.
Interesting.
I would say, yes, they were wrong in that we're not construction, but I get that it doesn't really matter. And it's a risk tolerance thing for that specific bank, how they think about their overall exposure.
Yeah. So I think it goes back to Damon's point, is just ask more questions. That would make sense. I've just always been in a situation where the banks have been fighting to finance the business for you.
Some of it is account size. So what's their total exposure? Some banks just don't deal. So we have a bank that we use for our like commercial properties. They don't touch anything but 3 business types of lending. They have $1 billion under management. It's not like a tiny bank, but it's still small, regional at least. But they're like, all they want to talk about is machinery, heavy equipment, and real estate.
They're like,
and businesses.
assets. Yeah.
Yeah. So they like our septic business because of the septic tankers. But besides that, they don't want to touch anything else. They don't even care what it is.
I'm telling you, David, if I would go back in time, it wouldn't be HVAC Jack. It'd be septic Jack.
Yeah. But yeah, I think it depends on that specific bank, like their current balance sheet, their desired exposure, like what their risk team feels about that industry, and like how big your business is. The bigger the business and the bigger exposure that they're taking for you, the closer they're going to watch.
Yeah.
What we were experiencing last year was, when I talk to other people about it, they're like, what are you talking about? We're not, like, no one has done that to us. And we might even have been using the same facilities that they were, but then we find out that our account size is 5 times, 10 times the size of theirs.
Yeah.
So all our account size got reduced to their account size, which just doesn't work for our size of a business. So yeah, like it is real. Like banks can bone you in half a second and they don't care. In any way.
Damon, we really appreciate you coming on today. I know it's a hard topic to talk about, and so it means a lot to, I know, us, and I hope a lot to the community that you're willing to put your story out there for others.
Yeah, for sure. And I'm more than happy to talk to anybody who has questions or is in dire straits and wants a listening ear. I know how lonely it is when your business starts to fail.
If folks want to talk to you, how can they find you?
They can find me on Twitter, Damon_CHL.
Thanks everyone for tuning in to Owned and Operated. Make sure you check out ownedandoperated.com. Sign up for the newsletter. We have episodes coming out a couple times a week. Thanks for tuning in to Owned and Operated, the podcast for home service entrepreneurs. If you enjoyed today's episode, please hit the like button and subscribe to the podcast. If you have any questions or topics you'd like us to cover, feel free to reach out. You can find me on Twitter at @WilsonCompanies. I'll see you next time.